Welcome to the channel. Don't forget to like and subscribe. Today we are going to talk about how banks get profit. Banks are financial institutions whose role is irreplaceable in everyday life. We never stop transacting with banks, whether it's to send funds, make payments, or apply for loans. Although banks are very close to us, many do not understand how banks actually work. Banks save a lot of money that may be countless. But the money is not their money or profits that can be used by the bank itself. Therefore, has it ever crossed your mind how can banks actually make a profit? Various kinds of transactions that you do at the bank, such as opening a new account, managing a debt card, making a credit card, to applying for business loan is a way for banks so that they can benefit. In general, these are main ways how a bank can profit from the business it runs. The first, net interest margin. Do not think that a bank has its own reserve of money to provide debt or loans to its customers. If you have or are currently in debt at a bank, the money given to you comes from savings deposited by other customers to the same bank. In a loan agreement, there is a certain amount of interest that must be paid as a condition for receiving the loan. This is how the bank rotates the money deposited with them and at the same time makes a profit for themselves. The interest you pay on your loan is the income from the bank. However, not all bank income can be categorized a profit. Some of the money they get must be returned to customers who save as interest on their savings. The money that remains and becomes the legal property of the bank is called the net interest margin. Second, interchange. Interchange is a fee paid by the merchant bank to the cardholder bank for the benefits and advantage received by the merchant in electronic payments. In short, interchange is a fee that must be paid when you make a purchase at the store using a card. Interchange is two-way, can be charged to the merchant or the place that receives the payment or to the card holder who makes the payment. Third, fee. Banking fee. Banking fees are not something that is foreign. If you have a saving account or account at a bank, whether it's a monthly fee or the cost of each transaction, this is unavoidable. The fee is of course the bank's way of making a profit. Here are some types of fees that are usually charged by banks to their customers. Account fee. Account fees are more commonly referred as settling balances. At the beginning of the account opening, the bank officer will inform you that there is a minimum balance that must be in the account and you cannot withdraw or use it. This minimum balance becomes income for the bank. The amount of the deposited balance is not the same in every bank. Even in one bank, there are differences in the amount of deposited balances, depending on the type of savings desired. The higher the class of saving, the larger the deposit balance. In addition to settling balances, the bank's other source of income is in monthly deduction for each registered account. Even if you never save on the account, but the status is still active, your balance will still be deduction every month. ATM card fees. Not only accounts are charged, your ATM card as well. Every month, there are two types of deductions made by the bank. The first is account deduction and the second is ATM card deduction. However, the number of ATM card deduction is smaller than the account deduction. The higher the level of your card, the bigger the fees. Fine fee. Dealing with banks means that you have to be prepared for the many types of fines or penalties they will give. For example, when the payment of the debt installment is due, don't be late paying your installment even if it is only for a day. The bank does not give you any tolerance and still imposes a fine even if you are 1 minute late from the specified time. Many banks make big profits from here.